Hello and good morning. Welcome to the first day of the two-day corporate forum at Sibos. I'm Joy McKnight. I'm Deputy Editor at The Banker, which is part of the Financial Times Group. I'm just going to go through a few slides because in this session we're going to be using Slido like the other sessions. So to participate in the live polls and ask questions, because we are going to do a live poll, you need to log into the Sibos app or sibos.com. And then you need to pick the session 3, so day 3 and then conference room 3. So I'll give you a few minutes to take a look. And then this is how you access it, to click on interact, select the room you're in, and go ahead. So if you have any questions, we will probably go over these slides a bit later as well. But I have to say I'm incredibly pleased to welcome to the stage Dr. Ailish Campbell, who's Chief Trade Commissioner and Assistant Deputy Minister with Global Affairs Canada, who will give the keynote speech to open the corporate forum. Thank you so much, Ailish.
Thanks. Hi, good morning. I'm thrilled to be here. I want to thank you for having me. I bring greetings from the Minister of Foreign Affairs, Chrystia Freeland, Minister of International Trade, François-Philippe Champagne, and Minister of Finance, Bill Morneau. Il me fait plaisir de me joindre à vous aujourd'hui. J'aimerais en profiter pour souhaiter la bienvenue à tous les délégués internationaux qui ont fait le voyage jusqu'à Toronto, ainsi qu'à tous les Canadiens ici présents. As we launch this discussion this morning, I'm really excited to share with you a few things. First of all, how I could jokingly say I have a strange message. My name is Ailish Campbell. I'm here from the government, and I'm here to help. And I mean that in all sincerity. So part of my short remarks this morning will be about how committed the Canadian government is to the fintech sector, to our financial services sector ranked top in the world, as well as to our disruptive innovators, serving consumers first and foremost with the services that they want to see in their lives, and enabling financial participation. I travel all over the world. One of the most interesting places I've been in the last year has been Argentina, where I learned that over 40% of people are unbanked. And to see that huge potential globally, particularly in developing markets, for advanced market technologies, not only on the regulatory side, but of course also in actual services, is hugely exciting. So I'm here, as I say, to talk about Canada's reputation, but also our commitment to this sector domestically, the work of the Bank of Canada and our financial regulators globally, and our commitment as we prepare to host the G7 and as an active participant in the G20, our commitment to ensuring both stability, but also a partnership. I talked with a few panelists this morning about the importance of partnership with regulators and our willingness to both learn from the best. Canadians are inherent collaborators, so to learn from the best in the world, I look forward to your ideas, but also to ensure that we have the regulatory experimentation and the innovation mindset that we know is going to be so critical to enabling this sector both in Canada and globally. So we're thrilled to partner with Sibos, and as I say, excited to showcase Canadian talent in particular at Sibos. Why am I here? Because the Trade Commissioner service that I lead is present across Canada and also globally in 160 offices. And we work with fintech partners around the world in order to do many things. Attract capital. So we work with venture capital partners in Silicon Valley, in Boston, in London, all over the world to attract venture capital to our startups. We work with those startups to attract mentors to help them scale and grow. In particular, I want to offer a particular highlight to the Canadian companies that are here in the audience this morning to take a look at our Canadian Technology Accelerator program, where we partner with the best fintechs that are ready with their business plans and ready to grow, and actually bring them not only to our regional offices across Canada in Toronto, Montreal, Vancouver, and elsewhere, but for concerted, tailored programs in Silicon Valley, in Boston, and New York in particular, to advance your fintech networks. It's also an offer to the companies that are in the audience this morning to make yourselves and what you're looking for known to the Trade Commissioner Service. So if you're a corporate looking for specific solutions and want us to help develop a tailored program for you in one of our cities or across Canada, we can do that. If you're an investor looking to invest in a specific aspect of fintechs, we partner with the ecosystems, incubators, and accelerators across Canada. Again, we can help you with that. So consider the Trade Commissioner Service of Canada, which you can find online, and connect to us, your one-stop network accelerator in Canada. And today, if you want to meet any of our trade commissioners, we will be in the Canada Lounge, which is one floor up. All day, we have 11 trade commissioners who are here from across Canada, the United States, Europe, and Asia, who are here to help you identify and accelerate your networking. It won't surprise you that I'm also thrilled to come here because I get to do the Canada pitch. I get to tell you why Canada is fantastic. And having looked at where Sibos has been over the last few years, I mean, it's like I can tell the people who have their Sibos badges, who've been to 6, 7 of these things, have been to the best financial service sectors in the world. And taking a look at where Sibos is headed next is also really exciting. But we have you here in Toronto for a few days, so I just want to make sure that I highlight to you, of course, Canada's benefits. So 5 bullet points. This is your Canada pitch. Write this down. Take this back to your CFO and your board. As you already know, probably our very sound financial regulation, the easiest place to start a business in the G7, according to the OECD and the World Bank. First in the G7 and G20 for doing business over the 2017 to 2021 period, according to the Economist Intelligence Unit. So looking out on a forward basis. Historic investments that this government has committed to in our infrastructure to make our cities as attractive as a place as possible for you to do business. Really excited myself about the launch of our infrastructure bank. Google made a fantastic announcement yesterday with Sidewalk Labs about their partnerships here in Toronto about making our waterfront one of the most digitally enabled in the world. And that's also going to combine with other digital services, including financial. First in the G7 and second in the G20 for lowest effective tax rate, according to PricewaterhouseCoopers. And of course, again, one of the world's soundest banking systems, according to the World Economic Forum. Something that I've done in my own work is partner with the World Economic Forum on something called the Inclusive Growth and Development Report. If you don't know that report, anyone in fintech, I would highly recommend it. A huge section of that report is actually about financial services, financial intermediation, access to capital for small business, access to capital for disadvantaged groups, including women, including the unbanked, who have a huge potential opportunity, I think, for the financial services sector providers. So that World Economic Forum report ranks all of us, and Canada ranks incredibly high, amongst the top 10 in terms of its existing financial services. But I can't help putting my consumer hat on here for a minute and also say that that pace of change needs to accelerate for the sake of the consumer. And as I look out, and I'm sure all of us know in our own lives, my own story is one where, for me, fintech was like the first time my dad took me to an ATM machine. And I thought that was incredible. And now when I look at the financial tools that are available to me on my smartphone, and I think about the ability that my children are going to have to trace their entire financial history and hopefully have increased data portability, I think that brings many more new solutions and services online. So the other thing that I want to highlight this morning is, of course, the Canadian fintech landscape itself. And I have a few slides here just to bring up if this works. This is in fact, you can't read the print very well. This is a nice, great map of Canada, though, in case you didn't realize where you were. I'll highlight a few of the points that are on here, and then we have this as a takeaway at the Canada Lounge. Fintech clusters have emerged across the country. It won't surprise you, very also integrated with the North American landscape. So when I talk about Toronto, I'm actually also talking about a huge ecosystem of millions of consumers that exist between Toronto, Montreal, Boston, Chicago, and New York City. And when I talk to you about Vancouver, I'm also talking about an incredible set of connectivity up and down the West Coast, and also increasingly connected to Asia. Our industry has attracted over $1 billion in investment capital since 2010. And this, coupled with a highly educated workforce, allows for us to have global impact in fintech spaces. Here in Toronto, we have the second largest financial center in North America, consistently included in top 10 rankings of global financial centers. The Global Financial Centers Index ranked Toronto 7th in the world in 2017. And we also have strengths across institutional platforms, loans and credit, and digital currency. The Ontario Securities Commission, which is one of the benchmark regulators in Canada, launched an OSC launchpad aimed at engaging with fintech businesses. And I've heard in my own outreach a lot of interest, of course, in the UK sandbox approach and increasingly opening up spaces where regulators can partner with smaller scale pilots for beta testing and unique partnerships between fintech companies and our large regulated financial institutions. And Canada is committed to doing more in that space. Calgary in Alberta has seen strong growth in exchange network and commercial infrastructure. Vancouver is home to a tight-knit ecosystem to some of our leading fintech companies and has a really, as I said, really interesting connectivity with Asia, Canada having been designated an RMB trading hub with locations both in Toronto and Vancouver to allow international settlements. And some unique financial instrument innovations with BC issuing dim sum bonds. Montreal is Canada's second largest fintech district with more than 3,000 financial companies with specific strengths in payments and settlements. It's also an opportunity for me to highlight our incubators and accelerators. I very much recommend that you take a field trip. So if you have even 2 hours of your time, make sure you go to the Mars district up near the University of Toronto, which is home to our incubator and accelerator in fintech, life sciences, and other technologies. And just down the road, and I hope some of you will have added a day to your program to see the University of Waterloo rank consistently in the top 5 of engineering schools globally, also supplies a huge amount of our fintech talent, which I think is another value proposition that Canada brings in terms of locating your business here. Specifically, and I have a few of these amazing companies that are partnering with us at the Canada Lounge. This is just a taste of the more than 3,000 fintech companies that we have across Canada. Whether it's cybersecurity, analytics, forecasting, cash and liquidity management, or risk and compliance, Canadian fintechs are providing solutions. A few of those include companies like Intersect. In artificial intelligence, Intersect utilizes machine learning for security analytics. Their program digests data and transactions within an organization quickly and accurately detecting possible threats. MindBridge AI is collaborating with the Bank of England. You may know, actually, I joked with Mark Carney once that I'd like to include him in our export statistics, the value of his brain having gone from Canada to England. Mark has actually brought a lot of connectivity, interestingly, between the EU and Canada. And he's really, as you've seen there, the series of innovative papers that the Bank of England has been coming out of, partnered with the Bank of Canada too on exploring how distributed ledger technology could assist in settlements. But as I say, I wanted to highlight MindBridge AI, who's partnering with the Bank of England in applying its AI auditor technology against broader data sets that span both regulatory and transactional data. And Deep Learning, working with Scotiabank here in Toronto to help identify potential delinquent customers and suggest ways to approach them. So we have many other companies such as these exhibiting today. I hope you'll take time to come to the Canada Lounge, stop in, meet a trade commissioner, learn a little bit more about our ecosystem, give us your card so that we can make sure that we create a network out of Sibos that lasts longer than this event. And I want to thank Joy in particular. Joy is deputy editor of The Banker, ranked Toronto #2 in North America as a financial hub. And so my challenge to her, and our challenge, frankly, working together with our fintech companies, is how to be #1. Thanks, Joy. Thanks to the whole panel. Have a great day.
Thank you very much. Thank you, Dr. Ailish Campbell. That's a great overview of what Canada has to offer, especially in the fintech innovation realm. So now we're going to move on to the panel, which is the State of Global Treasury, Untangling the Knots. And it's really sort of to dive deep into the uncertainty that we all face. So I'd like to introduce my distinguished panel. I have Guy Ingram, who's Treasury Development Expert and independent speaker. But he previously worked in Treasury at AB InBev, a Belgian-headquartered global beverage and brewing company. We have Suresh Subramanian, Managing Director, Head of Trade and Treasury Services Solutions Americas at BNP Paribas. Paul Taylor, who's Global Head of Corporate Sales and Head of Sales in EMEA, Global Transaction Services at Bank of America Merrill Lynch, and Joseph Vasson, who's Assistant Treasurer and Group Treasury Manager at Microsoft. So we have a very good panel, I think. But before we launch into the panel, we're going to run a short poll to get your input. And of course, we'll also be looking to the audience for questions via Slido before the end of the panel. So can we bring up the slide? Bring up the poll question. So we're going to take a bit of a pulse of what you think is the biggest impact on corporate treasury over the past year. So is that uncertainty over Brexit, the election of Donald Trump, new technology, including AI, machine learning, blockchain, rising interest rate environment, market and FX volatility, payment fraud and cybersecurity, new entrants, such as fintechs, but also banks pulling out of certain jurisdictions. So we're going to run the poll now. If you bring it up on your Slido, I think you can... So that's the end of voting. Well, it's very interesting. So new technology, biggest impact, but obviously there's a lot of uncertainty over sort of the political realm, especially in the UK, and then cybersecurity, payment fraud, that's really up top as well. So Joseph, I was going to turn to you first, and does this sort of tally with your experience, or what changes have the greatest impact on treasury industry over the past year, obviously from a US-based corporate treasury perspective?
Yeah, Microsoft is a global company. We face a lot of regulatory uncertainty. As we look at BEPS, Section 385 in the United States, Brexit, how is that going to play out and impact our business and our global pooling and cash structures? So that's more of a backwards-looking view. I think, and more of a forward-looking view, the top item that came back, AI, machine learning, is going to play a very big part in the forthcoming year. We are using AI now, but it's going to play a much bigger role going forward.
Okay, and Guy, from your perspective?
I think the real challenge is that you've got these multiple sources of uncertainty all happening simultaneously, and there's a certain amount of dependency within them and interdependence. I think when I look at it, there are sort of two main areas where we've seen impacts. The first is in risk management, the second is in operations. I think on the risk management side, the impact hasn't been that great. I think we've had some very strong policies which have sort of carried us through, but we've been asked to demonstrate value far more now than in the past, and that's created increased demands, and we've had to try and find ways of automating that demonstration of value, running dummy portfolios, that kind of thing, but without increasing the size of the team. I think on the operational side, we've seen a couple of types of impact. The first is sort of the one-off, and I think we'd seen, one of the questions was sort of banks pulling out of certain jurisdictions. That has had impacts where we've had to shift services from one provider to another. It's a pain. You have to run a project. It doesn't come for free. But it's a one-off and you move on. I think more on a recurring basis, Joseph mentioned the impact of regulation, and I think that's where we've seen sort of the biggest ongoing impact, particularly with, I think just it's very dull, but bank account maintenance has become an industry, and we've had to hire at least a couple of FTEs to manage our bank account maintenance. Just the amount of documentation that needs to be provided. There's uncertainty. You provide one load and then it changes, and before it's even been registered, one of your signatories is left and you need to do it all over again, and it's just an ongoing burden for the team. We're looking for the silver bullet in fintech, whether it's digital identity, some kind of magic IBAN that actually works, a global standard. So hopefully some of that comes along, but at the moment it's very manual. It's wet ink signatures, it's hard copies, I'm sure the courier companies are doing brilliantly out of it from us, but there's the stacks of paper that are required, and it's dull, but that is the biggest challenge.
Okay, Suresh, I was going to ask you, because obviously the rising interest rate environment it doesn't seem to be affecting Treasury at all, and also the FX volatility, where I'd say even last year that would have come much further up the the rise in importance, right? So what is your take on that?
Basically, if I take a step back and look at the uncertainties in front of the corporate treasurer, we alluded to, both Guy and Joseph alluded to some of the key factors. We talked about the regulatory change. We talked about the impact in the risks that a treasurer faces. And I think for me, it's about the balance. If you look at the treasurer's role over the last 10 to 15 years, more has come on a treasurer's plate. In the pre-2007 era, risks from counterparty risk from a financial counterpart were seen and perceived as lower. Dovetail that with the fact that banks have, for various reasons, needed to look at their geographical scope and exit markets. And once you start looking at those things, treasurers have had to factor in, which bank do I partner with, in what markets, what are the products and geographies banks are going to remain committed to over the medium term, and defining those partnerships that become sustainable. And more recently, recently BNP Paribas did a study along with the European Association of Corporate Treasurers and PwC and SAP. And when you look at the top concerns of corporate treasurers, cybersecurity is top there. Data analytics and that kind of dovetails with the new technology. How to use the analytics, to use the data that exists to combine the smaller treasury teams having larger responsibilities, therefore use the data in a more meaningful and powerful fashion. And the third concern, which is very significant, is all the changes on the regulatory framework and the uncertainty associated with that. So for me, when I see these factors, it's going to become more and more a question of partnerships and how the partnerships can be built across the spectrum with various players.
So do you mean like the banks, but also
banks? It means fintechs.
Corporates.
It means consultancies. It means corporate to corporate in a peer group environment. So it's a bunch of various factors which are going to become very relevant as we move forward, because I don't think any bank can go at it alone. I don't think banks need to work with each other. And I can see that at Cybos. From 7 or 8 years ago, when we used to have our bank-to-bank meetings, a lot of it was the proprietary source. Now it's becoming far more transparent in terms of how we work with each other and how we collaborate with the providers in the space as well. So I think the game has changed, and it will continue to change in response to the environment.
Paul, would you like to comment on some of the responses, and especially from your experience in Europe and across the world, really? Do you think that tallies with what's going on outside?
Thanks, Joy. The first thing to say, I think it's fascinating that the top answer is new technology, and I think, having been at the conference for the last couple of days, that certainly bears out in terms of what people want to talk about, what they're curious about. I think one of the things that we can observe is that over the last few years, there's been a lot of talk about certain terminology, whether that's artificial intelligence or robotics or blockchain or Bitcoin or distributed ledger. And in some sense, some of that conversation over the years has been about solutions looking for a problem. And there has been an effort to try and find suitable problems to be solved with the technology. I think what we're seeing now is there's actually an interconnectedness between the topics on here, and many of the problems below new technology may end up being solved by the technology. And that is far more of the conversation this year. To pick up on Suresh's point, I think one of the most dangerous things that we can do collectively as a financial services industry, and in that, I don't just mean banks and I don't just mean fintechs, I mean all of us, Guy, Joseph and so on, I think we're all part of the financial services industry. And I think one of the most dangerous things we could do is to innovate in silos, to innovate on our own. And it's what I call the Betamax dilemma. I'm aging myself there, sorry for that. But it's the Betamax dilemma, this idea that all of us are investing independently, alone, in our own ideas about what the new technology needs to be, what it needs to do, and that there's a real underlying fear that we will come out with something at the end which is not the standard that's being applied across our industry or with our counterparties or our clients and so on. And I think the more that we can encourage the dialogue, the stronger the outcomes will be, the better equipped the banks will be to deliver on the expectations of the client, and the better positioned the corporate treasuries will be in order to benefit from those services.
Guy, I was going to ask you, because you sort of pointed out some of the pain points and all the paper and still a lot of manual work. And obviously, you know, when we talk about AI or machine learning, that kind of thing, that should be able to solve that in some degree. But obviously, is that filtering down to the corporate treasury?
It's trying to. I mean, I can't remember the first time I was talking to banks about EBAM. And we ran a pilot, and it crashed and burned. I think the technology is probably moving a lot faster than the regulators. And I think if the regulators allow the use of some of the technology to address the challenges that the regulations are producing, then I think, you know, there'll be a quantum leap. Particularly in developed markets. I think what actually might happen is that what we're seeing in some of the more developing markets, particularly in Africa, where they've had no technology and then they've suddenly brought technology in, they've jumped ahead of some of the more developed markets where the replacement of the legacy systems is too expensive for banks, central banks to countenance. And sooner or later, you're going to have the developed world looking up at what was the developing world and the new technology that the developing world has adopted now, and having to play catch up, and that may be the trigger. But certainly at the moment, in the areas I've talked about, we're not seeing technology yet able to give a suitable solution.
Joseph?
I think kind of harkens back to something that Guy and Suresh both said, one on the partnership front, also on, you harken back like the KYC, bank account maintenance, EBAM. As we look at that, I fully have 8 people working on this full time and an army of attorneys globally helping to comply with these regulations. I see technology, and particularly distributed ledger technology, as a possible solution to this. It's not the fact of what we have to produce for the regulators that really slows the process down. It's the level of certification and authenticity that the documentation needs, whether that's something that has to be legalized, notarized, apostilled. Trying to get certain things through a consulate can take months. And so I think we need to partner collectively with our financial institutions and other corporates to talk to regulators and say, hey, you're trying to promote economic activity in your country. And I always believe in being compliance. We're all risk managers as treasury professionals, bankers, and we understand that. But how do we do this in the most efficient way while maintaining compliance? I always like to say, customer first, compliance always. It's kind of a tag word, but using that lens to do things.
Suresh, did you want to add anything to that?
I'll probably take a different tack and bring in a new theme, which I think is perhaps going to be, we're talking technology, we're talking risk, but something which I believe will be very material as we go forward. And that's, to me, a partnership in a sustainability context. We've all seen in the supply chain arena efforts to build supports large corporates trying to support their supplier base by creating payable programs, enabling them to access cheaper funding to ensure their sustainability. What we are starting to see now is, along with partnership of qualifying firms, to see whether the quality of the supplier from a sustainability perspective, from an ecological, human rights element, is going to also become a driver going forward. And I see banks playing a key role in such an endeavor, where banks, alongside the firms that validate the supplier base, enable large corporates play an important role in ensuring that the planet is a better place to live in. And I think that's going to be, that doesn't figure here, but that's going to be something that is, when we talk to treasurers, we see increasingly larger number of treasurers talking about the sustainability of their supplier base and the risk reputationally that associating with the wrong type of supplier presents to them. And I see banks and even fintechs playing a role in mitigating this risk. So I just thought I'll throw a different topic on the table.
Yeah, no, I think that's really fascinating. Guy, would that resonate with you? Do you think about that in the Treasury?
It is definitely something that that we think about in the brewing industry, particularly in again developing world, supporting small farmers and who don't necessarily have access to finance and the capability that we do. So yeah, for sure.
Okay. I was going to ask about, because obviously this year there will be quite a few jurisdictions moving to real-time payments. So I wanted to ask, Joseph, maybe I'll address this to you first. How does that will that really affect how corporates make payments? Because obviously it's happening in the US, it's happening in Europe, Australia is going live with its new payments platform. Do you think that will make a big impact on how corporate treasuries, and then that sort of ties in a little bit to the payment fraud and cybersecurity as well, whether that actually raises, to move to real-time payments, does that raise that threat?
I'm not sure yet. And the reason I say this is the way Microsoft is structured, the B2C payouts, the B2B payouts, AP actually runs through a different, outside of Treasury. We're responsible for the underlying architecture and bank account management, which flows through to a concern we have. If we talk about real-time payments in markets, what does that look like for our cash positioning? Well, we try to be fully invested all the time. So, how do we make sure there are funds available to make these credit transactions? Another challenge, as we look at this, that Microsoft faces that other corporates might, is we run a centralized treasury versus a decentralized treasury, where we have regional treasury hubs. So we try and move our funds globally, headquartered out of Redmond, with a high degree of automation. So there really is no one in market, in Singapore or Hong Kong in a treasury center to make sure funds will be available in Australia to make that credit transaction. So as this rolls out, we need to think about our operations and how we structure that beyond just what is the will we actually use it to pay our customers, partners.
Paul, what would you say? How do you think that this move to real-time payments is really going to affect corporate treasury? I read a recent Ovum study that talked about, that said that 80% of corporates say real-time payments will improve risk management, that it has improved liquidity management, and it improved cash visibility, but at the same time, it also increases financial crime risk. Would you agree with that?
Actually, not necessarily. I think banks have a responsibility to, firstly, to always ensure the security of the funds and the transactions that they manage on behalf of their clients. I think secondly, to ensure that they are being compliant, that they're being legal in what they're doing to support their clients. And thirdly, and increasingly, and this chart kind of says it too, to make sure that they are delivering services which have a current relevance to the businesses of our clients. And personally, I see real-time payments as the expectation of an industry that has moved increasingly onto technology, that does business increasingly globally, and that, for perfectly understandable reasons, would expect real-time value on the transactions that they want to make. Many of our companies nowadays operate on online portals, they operate on real-time systems, and the idea that their payments wouldn't be able to operate on the same basis, it seems somewhat anachronistic. So I don't perceive an issue there. To your question, Joy, about security, the idea that payments which can clear and settle at high speed is not a new idea. And as an industry, we've been doing that for effectively 40 years with what were originally called RTGS systems, albeit we did it with different technology and under different circumstances. So the idea that this poses heightened risk, I don't think is correct. I think what we as an industry, and again, I include everybody in that, we as an industry need to think about is how we set up the schemes that govern the ability to deliver real-time payments to make sure that when payments are made irrevocably, that there is some sort of recourse for any potential fraud, for any potential security risk, and that obviously the systems that support that real-time or real-time payments, real-time clearing, have the requisite security protocols and the interconnectivity with our client systems to make sure that we're not adding risk to what they do.
Suresh?
I tend to agree with Paul. I mean, at the end of the day, the speed of payments is not necessarily the core issue. There have been, across various jurisdictions, various ways to make those payments happen quickly. Now, once we add the layer where there have been delays and pain points from a corporate perspective have come more because of the layers around the compliance element, the filtering, and as that gets complex, we will have to get better at doing it. Is a cybersecurity risk real? Yes, I believe it's real for all the players. All of us having data, whether it's customer data or client information or transactional information, are at risk at various levels. And the more open systems and technologies get, and more accessible technology gets, we will have to find better means of staying ahead of the game. So it's inevitable, and we'll have to find the means to cope, and we'll have to do it collectively. Because I think the old adage of being as good as the weakest link is absolutely true here.
But Guy, do you think the banks are doing enough to help the corporate treasurers with the cyber security threat? Like, it keeps rising up in terms of importance. But do you think that that partnership that Suresh mentioned before, do you think that's really happening?
Yes, I do. I think it's one area where we really are seeing banks as trusted partners, and they're being very proactive in approaching corporates, providing training, advice, and all that good stuff. And I also agree with the others on the real-time payments not necessarily increasing risk. I think the internal controls within corporates will still be there before a real-time payment gets released. And actually, it may improve those controls because once it's paid, and you don't have 2 or 3 days to issue a recall notice. And certainly within the bank processing, you can be pretty sure that the bank's not going to shortcut the sanction screening and the fraud protection controls that it's got in place just because it's going to be a real-time payment. I think you're going to see more payments fail because the necessary screening or whatever other checks, whether it's credit or whatever, haven't been done in time, and the payment will just get rejected and you'll have to press go again and wait another 5 seconds. So, I think banks are definitely partners in cybersecurity.
So a question that I've asked a number of panels that I've chaired over the years is really around the real need for real-time payments as such, or are you really looking for real-time information instead? What would you say, Guy?
I do think that real-time payments are more of an attraction for consumers than for corporates. I think the payment cycles that corporates use in vendor payments or in treasury payments are very well established, and I think we all understand cut-off times as they are and have been for years, and we structure our processes to make sure that we pay on time. It's if I want to give you some money, I can just get my iPhone out and flip it across to you in real time. That's probably as a consumer where more attraction is, rather than in the corporate space.
Okay.
I had echo Guy's comments. When we think about the B2C, B2 small business, the real-time payments are more important for them. And depending on the nature of your industry as a corporate you're in, it's going to have either more importance or less importance. So I agree with Guy on that front. And there was another point you made that I wanted to come back to, but I just forgot.
Okay. Paul, did you want to add anything?
I was just going to say, I feel there's a relevance here to the evolution of something like SEPA. Because when you introduce a new instrument, we saw this in the UK with faster payments, we saw it with SEPA, which will be 10 years old in January. There are two elements to the way in which the collective stakeholders bring these instruments to life. There is the implementation and the mass adoption of the instrument and the setting up and the making available of those services. And that's part of it, and it's the part that we all kind of like to talk about in panels like this, and that's where we kind of get hung up. But what's more interesting is the application of those instruments. SEPA is interesting because it makes possible cross-border payments within a specific economic zone, and in a way that wasn't possible before. Real-time payments are interesting because they create a possibility for, whether to Guy's point, a consumer or a corporate wishes to make a real-time payment. The real question is, what's the application? And I think it's only once we start to see the evolution of some of those applications where I tend to believe that, for example, from a corporate treasury perspective, the idea that just-in-time could really be just-in-time from a payments perspective, as opposed to waiting for a clearing cycle. I think that's interesting, and I think that gives rise to other services and other ways of managing the working capital cycle, which are somehow more intuitive than maybe what we do today, which has been slanted around accommodating the ways of working which we currently have. So I think real-time payments on their own are somewhat interesting. I think as we see the development of all of this new technology, and to your point, Joy, the evolution of data as a much larger part of what banks do for their clients and how they manage for their clients, I think that's when real-time payments becomes a necessity.
Suresh?
I mean, to add on to what Paul said, I think it's about visibility. I think for a corporate and large corporates, it's the real-time payment will be nice to have, but the real value is going to come from a treasurer knowing precisely where the liquidity is sitting, and it's not been that relevant given the interest rate environments across the globe, and the kind of corporate liquidity that the large companies have built over the last few years. But that's where the value addition is. If there is greater visibility across the entire 50 bank accounts over 80 countries, 80 bank accounts, 160 bank accounts over 80 countries, and where the balances are, how they move across those jurisdictions, keeping in mind the various barriers that exist in locked cash across the globe. That visibility is going to be far more valuable than just the fact that they can make quick payments.
Totally agree.
I think that's where the value proposition lies.
Hey, coming back, I remember the point. It was the finality of the payment, the information we're reporting. Where is it at? It's particularly in Treasury for high-value payments, tax payments, mergers and acquisitions, things like that. And you're trying to close a large deal, and you don't know where that international payment is going. You don't know if it's hit that beneficiary's bank account. Once we can get that enhanced information, we have a lot of gray hairs when you're closing billion-dollar deals. So that'll be nice to see when it comes.
Yeah, real-time visibility of individual payments is probably more valuable than real-time visibility of a cash position.
Well, obviously, there's SWIFT has been working on this with the SWIFT GPI, the Global Payments Innovation Initiative. Do you think that's the answer, really? Is that answering those kind of pain points?
Yeah.
Yeah.
That will definitely help.
I think GPI is interesting because it brings a level of transparency which is not only there, and I can say this as a banker, is not only there to hold the banks to account and to make sure that they are delivering and can be seen to be delivering at every point in the value chain that delivers value from one end to the other, but it actually starts to become a risk mitigation tool for the corporate treasurer to see where the payment is, to understand the route that that payment is taken. And if there is some unexpected deviation or there is some issue with that, GPI affords a level of interrogation of the payment process which has never existed before, and which I think brings greater security to corporate treasury.
This creates the base layer on which other products would have to be built, because the information will exist, but the information flow that gets to Guy's desk may not be necessarily what is now built in the GPI. So it's on the banking industry to build that information flow so that it comes in and can be readily used by Joe and Guy. So I think that's where we should be going.
Okay. I was going to ask one more question and then throw it open to the audience for questions. So if you have any questions, please send them through. But I was going to come back to some of the points that Dr. Ailish Campbell made, really about the fintech explosion. Obviously, she was talking specifically about Canada, but it's a worldwide phenomena. But for the corporate treasurers, how are you engaging with that wave? Are you engaging? Is it possible? Or do you want to go through your banks to sort of have them do the vetting ahead of time for different fintechs? I'll start with Guy.
I think it's a two-pronged approach. I mean, certainly for me personally, it's part of my role to engage with new providers, to hear their story, to hear their proposition. I develop a treasury technology roadmap for 3 to 5 years out. So I need to see sort of what's coming down the track, where it can fit in. But also to ensure that if providers really are sort of working on the problem that we have, to make sure that they understand exactly what it is, and also I think sort of how corporates work. I think sometimes they've been in a little bit of a bubble, and then they come and talk to us, and you're in a big corporate space, and particularly the IT organizations, they like the big providers. They like one ERP, one network provider, one hardware provider, and any other suppliers are a bit of a pain to deal with. And breaking into that cycle is quite a challenge. Understanding that you might have to wait 3 years as a fintech provider before what you're offering actually works with what I'm doing. It's quite a long time. But absolutely, yeah, the engagement's there, and the willingness to hear what's on offer is absolutely there. But you did raise a bit of an elephant in the room in the trust point of view. Do you want to put all of your multi-billion-dollar payments through a platform that's provided by a 5-person company? It's a little bit of a challenge when you take that to your lawyers, and they flip through the contract and look at the liability and indemnity sections. So that's where partnership again comes in, and the sponsorship of some of these smaller providers by the large trusted banks just absolutely makes it a possibility, and sort of moves it from sort of a hypothetical idea into likely or possible reality.
Okay. Joseph?
I think being a technology company, we're a little bit more out in front on these things. We've already partnered with Bank of America Merrill Lynch on a proof of concept trade product that runs on blockchain distributed ledger technology. From a technology company, I feel like it's our job to innovate, not necessarily wait for the banks, but to push the banks. We have technologists internally. We have thoughts and ideas about different architectures we could use, and then talk to our banks about those. Here's how you could use this idea, and then at some point possibly partner, but always exploring and pushing those boundaries, and try and be a thought leader there as we talk to the product managers and strategists internal to the banks.
What about from a bank's perspective, Suresh?
From a bank's perspective, I mean, both Guy and Joe raised some very interesting thoughts. From a bank's perspective, the biggest challenge has been, historically, if you look at adoption of new technology, has been the ability to be nimble while maintaining the security, the structure, the integrity, and the ability to get scale. That's what fintech brings to the table, the ability to be nimble and bring new ideas and be innovative about those new ideas. So if fintechs can accelerate their time to market, and banks and financial providers can get the layer of security that the corporate world needs from a liability perspective, that will be something that will be a winning combination. Right now, it's a question of bandwidth, I believe, because there are so many good ideas, so many good fintechs, and how does an idea become something that becomes an industry-wide acceptance? Because there are plenty of proof of concepts that have worked in small pods with one trade, one transaction. How do you scale that and get adoption across the industry before it can become something meaningful? I think that's going to be the challenge the industry has to deal with, because otherwise we are not going to get scale, and without scale, it's not going to move the needle for the corporate sector.
Paul?
So in part, to echo what Suresh just said, which I completely agree with, I think number one, fintech, by its current definition, is basically about the satisfaction of customer needs. And the reason that there is the explosion of creativity that Suresh refers to is that financial services, not as an industry, but as a conversation topic, have so much greater potential as a result of the advances in technology over the last 20 years. And that is now exploding in the form of what we now call fintech. The second point I would make is that I think, and with all due respect to you, Joy, I think it makes great copy to say that banks and fintechs are big competitors and one's going to cancel the other one out. I personally don't see it that way. And to kind of paraphrase what Suresh just said, I feel that banks have their role to play, which is as core, secure infrastructure, which puts in place scale, and which ultimately becomes a phenomenal aggregator of data, of client data, of financial data, of counterparty data. And on the other side, the fintech companies have that ability to interpret market requirements and to fashion new services and products. And they may not be fully fledged products in the way that we think about it today, like Magic EBAN, but they may be smaller niche services or products which fintech companies are better placed to design and to bring to life, and which the banks, we've spoken about this before, Joy, the banks think of it almost like a smartphone which has its core platform, it has its core functionality. The fintech in that sense becomes an app. And to the point that Suresh made, if the fintech services are apps, then there is really no limit to what can be brought to market. And in a world of APIs and in a world of open banking, and assuming that banks have the platforms which can support that, there really is no limit to the extent of the applications which could be brought to banking platforms with that security, with that scale, but for the ultimate benefit and satisfaction of the client need.
Okay. All right, I'm going to move to the questions. So we have a few questions. So one is, corporates working in a bubble, in quotation marks. Is there a disconnect between corporates and banks in terms of technology adoption, or are banks and corporates aligned?
Yeah, I'll have a go. No, I don't think we are working in a bubble. I certainly know with cash management banks that I've worked with, they are very keen to open their doors to show new products while they're in development stages and at various stages of development. That there are ongoing conversations on sort of the bank's technology pipeline. So I really don't think that there's a bubble. I think what is the challenge is banks are still delivering through a more traditional technology pipeline, and the lead time is quite considerable before a new product comes to market.
I mean, to add to what you're saying, when we look at our innovation efforts, a lot of our innovation efforts are done in partnership with clients, and because at the end of the day, we are not going to build that beautiful product and launch it out in a vacuum. We have to make sure that that product serves a real need. So at the end of the day, that partnership is inevitable, and we see it all the time.
Because I always wonder about how I've been asking a few people, I've been doing video interviews this week, and I've been asking a few people how to bring the corporate customer along the digitalization journey with them. And a lot of banks are talking about sort of co-creation. Paul, is that your experience?
Yeah, look, I think any financial institution which thinks that it can operate in splendid isolation of its clients' needs faces extinction. And in that sense, if I go back 10 years ago, this conference was in Boston. And the business of selling cash management services was much more prescriptive, much more narrow, and it was about specific products, whether SEPA compliant transactions or Italian direct debit or whatever. It was a much more narrow, prescripted set of services. What we see now is that our clients, like Guy, like Joseph, they have much more sophisticated needs. They sit in a much more elevated position in terms of the company and its strategy and the role of the corporate treasurer in that strategy. And they discuss with their banks what they are trying to achieve, and we work together to help them satisfy their needs. And if they don't see value in that, then obviously they wouldn't. And from a bank's perspective, if we didn't engage in that, then to my point, I think we would become extinct.
Joseph?
I don't think we sit in a bubble. We do partner with our banks. I think it's very important for us to talk with our banks to understand what our goals are. Ultimately, we're trying to be an enabler for our business to drive top-line revenues. And then asking, here are the pain points we see and able to either apply cash or to be able to expand our business quickly or to move funds globally to where we need them to be to make certain investments. And it's about communicating those to the partners and what are those pain points and what technologies can be used to solve those. I do think that the banks operate on a slightly different type of release cycle than the corporates. We're working on sprints, they're working on quarters. So we try to move a little bit, try and push, and they may obviously have a higher compliance burden than a corporate. We all have compliance, but trying to bridge those two, there is friction there, but trying to work for mutually good solutions.
Okay, I think we have time for one more question. And this is from Thomas Mayman. Sorry if I've mispronounced your last name. And I'm going to paraphrase it a bit. Obviously, the top question that came out on top in terms of the poll was around sort of new technology. But the question that Thomas is asking is really that, is it AI specifically that is really going to have the biggest impact on Treasury? And if not that, then what?
We're actively using AI right now in machine learning. We're using that for both our balance sheet hedging programs. We're using that for forecasting our investment income. And that takes some of that human bias out of the equation. We are going to be using it shortly. We're working on for intercompany flows. Where does money need to be and when? And so we can make sure we have the right cash available in certain places. But we're still proving that out right now. But we have the technology and we are using it.
Suresh, do you think that?
Yeah, I mean, I see that happening in areas like compliance more and more. We see some of it being used, but it will be used more aggressively going forward, because just the burden of the requirements have increased so much that throwing AI on some of these problems is going to help us improve the speed and reduce the cost. But I don't think AI is the only thing being looked at. I think we are looking at distributed ledger has been looked at intensively in various application areas. AI, some robotics. So there is a bunch of things being looked at in various application areas. So I don't think it's only AI.
Guy?
I would agree. Suresh mentioned robotics. I think sort of AI-enhanced robotics is probably where the action's going to be.
Blockchain? Any blockchain?
Probably.
Anyone for blockchain? Paul?
I would just say I personally think that in an increasingly digitized world, an increasingly systems-based world, data is king. And the way in which we aggregate data, the way in which we mine that data, the way in which we manipulate data to perform functions and processes that we've done more manually in the past, ultimately for me that's the prize. And to echo the point that Suresh made, artificial intelligence, as it currently stands, is one articulation of what is possible with data.
Exactly.
Okay. I'm afraid we don't have time for the other questions, but I would really like to thank the panelists because I thought it was an excellent panel and so interesting. Joseph, Paul, Suresh, Guy, thank you so much. And as I said, this is part of the corporate forum. It's a 2-day stream, and it will continue over the next 2 days and include sessions such as the future of money, the new frontier of digitalization and corporate treasury, and what's next on the wish list of corporate treasury for global payments innovation. So thank you very much. And I just also want to say that there is a cocktail drinks this afternoon from 5 to 7:30. Level 400, so everyone is invited to attend if you want to continue the discussion. So thank you so much again. Cheers.
Thanks, Joy.